Hi, my name is George Dagnino. I'm the editor of the Peter Dack Portfolio. What I would like to show you today is the power of the inventory cycle in driving market prices and especially Bitcoin prices and commodities. The business cycle is divided in four phases. The phase one is when business starts improving, manufacturing is building up inventories, they buy raw materials, hire people, and borrow money. Eventually, this is a positive feedback and growth starts picking up above average. But at some point, though, commodities, interest rates, and wages and inflation starts rising at the end of phase two. This is when inflation rises, purchasing power slows down, sales therefore slow down. Business does not recognize this transition and keeps on building inventories, but sales are slowing down. So there is inventories are going out of proportion, and therefore this hits earnings because of the cost of carrying inventories. So business now decides to cut inventories, and this is the business cycle goes into phase four, which is the phase where all the excesses created at the end of phase two are now corrected, which is inflation, interest rates, commodities, profits, and everything goes down. Until when? Until this point here, when inventories are back into balance with demand and business start building up production, and the new phase one, starts all over again. Let's see now how all this has what is happening right now and where we are now in the cycle. The immense government stimulus created tremendous volatility in the economy and in the marketplace. This is government spending is the red, which now has been slowing down. Of course, when the government puts money into the pockets of people, people put it in the bank deposits, and banks then lend it out, and that create money supply, and therefore they create the juice with used by the economy to grow. But now you notice because of the slowdown in government spending, banks have less deposits, so the money supply is decreasing. The huge stimulus programs of the Fed created a lot of inflation, and the outcome was that income after inflation is now been declining for since mid 2021. So yes, we felt wealthier from 2020 to 2021, but from that point on, actually, our income has been declining after inflation. Of course, as income slows down and then declines, sales after inflation also now have been slowing down and now really are flat, zero growth. So we are now in a classic position of phase three, where sales are slowing down, the blue line, and inventories, the red line, as ramping up. So what happens to earnings? Obviously, earnings are declining because of the cost of carrying these huge inventories. Notice that inventories are running at double digits when historically instead has been growing at 3-4%. This is around 10%. But anyway, the point is that now sales are slowing down quite sharply, and as happens in phase four, now business is forced to cut production. But when you cut production, what do? You buy fewer raw materials, you hire fewer people, and of course, you borrow less. So there is a downward pressure on all this cost and in overall inflation. The stimulus programs created huge demand, and therefore commodities rose. This is the growth in the price of producer prices of copper and lumber. So all commodities ramped up, but then when the money supply or the government spending started slowing down, you could see that all these commodity prices also slowed down and have been declining. The blue line is the price of Bitcoin, which is rose from 2020 to 2021. as the government increased the liquidity in the system, gave money away, and of course was deposited in the banks, and the money supply soared. But then when the government slowed down spending and the money supply started slowing down, commodities, the green and red is copper and lumber, and the blue is Bitcoin, started weakening. So the point of this chart is that Bitcoin, like commodities, rises when there is a lot of liquidity, but also declines when the liquidity is draining the system because the economy is slowing down. This is another way of looking at the price behavior of Bitcoin. This is Bitcoin from 2015, declining, rising, and declining. And this is the price of copper. As you can see, it rises, it declines, it rises, and declines, exactly the same turning points of Bitcoin. So Bitcoin behaves like copper and like most other commodities. This chart relates Bitcoin to the business cycle. The graphs at the bottom panel is the business cycle as we compute it. It's a proprietary model, and when it rises means the economy is strengthening. When it declines, the economy is weakening, strengthening, and weakening. Of course, the economy has been strengthening since 2020, but then from 2021, because of the slowdown in the money supply, because of reduction in government spending, the business cycle started heading lower. This, of course, I discussed this in the Peter Deck portfolio. When this is the time to be aggressive in the market, this is the time to be defensive. But the important point is that Bitcoin turning points are closely related to the turning points of the business cycle. When the economy is strengthening, business is ramping up production, buying commodities, lumber is going up, but also Bitcoin. When business is defensive, is cutting production, reduction of inventories, fewer purchases of raw materials, commodities go down, but Bitcoin as well weakens. When the economy is strong, Bitcoin is strong. When the economy weakens, Bitcoin is weakening. Now, our study of the inventory cycle and the current position of the inventory position of the manufacturing business, it tells us that business will be slowing down. This curve will be slowing down for many, many more months, possibly until the end of the year. So the outlook for Bitcoin is definitely not positive. I publish the Peter Deck Portfolio Strategy and Management, and you can have a free subscription by going to this URL, and so you can see what I said and what have been my outlook in the past several years. I have forecast videos, which are has been, quite frankly, I'm not embarrassed to say that have been quite accurate on YouTube, and this is the URL. I wrote this book, was commissioned by McGraw-Hill Education, has been available in English in the United States, and is also available in many languages in Asia. I also wrote these two books, Easy Ways to Beat the Market with ETF and Investing Wisely. It is easier than you think. You can review all my articles on my website, www.peterdag.com, and this is where you will also see videos and other documents. Thank you very much for following me.